All right, good afternoon. Welcome back here to Trader Renee. Great to have you aboard. A lot of just kind of now flat here today, after the initial kind of market open and then a kind of initial little surge. It's been fairly flat, bulls in control mostly. We haven't seen any kind of selling that's that would suggest that, sellers even exist in this market right now. Kind of what we talked about and what we expect here on a day like today. And overall, just kind of sitting up here at this 2,800 level on S&P futures. If we back out to an hourly chart, this is kind of where futures have spent most of their time over the last while. We got the dip below after the rip above, and now we're back up at this level, and sitting right here. So just not a lot to take from it in terms of directionality or anything like that. And I think one of the things we take from it is consolidation risk is high. You take something like a Nike, which earlier today, down about 60 cents. All right, is this thing going to get sold off? After yesterday's rally, okay, we got a little bit of topping signal in here. Okay, you know what? Probably. Okay, fast forward a couple minutes and boom, it's back to green. And it's not really moving at any sort of pace that, suggests that, hey, you know what, bears, you've got a great advantage right here overall. In fact, for a lot of these, it kind of suggests that the best risk-reward play is playing it off today's low and playing things higher off of today's low. If we look at the number of stocks above or below the 7-day moving average, you can see this number is shifted. It's up to 350. This number was down to 100 last week. And so that's a huge number of stocks moving from below to above the 7-day moving average. Generally, when this gets up to around 400 or 80%, that kind of triggers a little bit of a bullish signal. But the bulls have definitely taken this back, taken control back here of the of some of the short-term metrics there. When we compare that to the 20-day moving average, which isn't as quick moving, bulls still have a little bit of an advantage here. They've even taken some of these back here, and it has been a big start to the week here for the bulls. And it's one, we talked about on Friday going into the weekend, what some of these weekly charts look like and some of the major breakdowns that were out there, right? And, it's one of those where, traditionally, we will see further breakdown after we see those types of weekly breakdowns. But, the start to this week is threatening those and is threatening that those, will kind of, fade into obscurity. Now, is it enough yet to say that? No. If we're going to make statements on weekly charts, we take a look at where it is at the end of each week. So right now it's kind of a little bit of flash up. But if the rest of the week sells off, boom, those signals are confirmed. And, it's probably some trouble going forward. But, for now, just very tepid action in the market here today. Not a lot of... going on. If we come and take a look at the bullish percent index, and, this is something that had been just rising and rising and rising, seemingly without stop for quite a while now. It has pulled back over 6%. It has a technical bear signal to it. Now, that was triggered on Friday. Yesterday with the big market rally, we didn't see it change. Today with a small market rally, we don't see the bullish percent index going up. So this is one of the first times we've seen this for the bears, where they can point and say, hey, you know what? We're seeing a little bit of an erosion in the indicator, even though the market itself is bouncing and going up. So we are seeing that the bears still do control the overall volume flows out there in the market. So that is, that is something. And then you look at small cap, transport, emerging market performance, it's pretty neutral in terms of bullish and bearish control there. So a lot of flat risk. In fact, today the market vibe might turn neutral. I'm not sure where it is right at this moment, but I'll get that posted into the feed. I know it has a risk of going to neutral here today. Now, I'm going to look at this and go, okay, individual charts, individual stocks, do I have a chance to play them? And when I look at the stuff on my watch list and the stuff that I like to get into, I just don't have anything. I talked about Home Depot earlier and, wanting to play it short. But you'll notice, still trading above the 7-day moving average, just continues to grind on higher right here. So, not something that's giving me any sort of entry point to step into or to say, hey, you know what, I want on the put side. And in fact, it's basically saying, hey, bulls have the advantage right here. And the most probable play in the short run is, hey, buy Home Depot with a stop on today's low, with this fresh move above the 7-day moving average. That's kind of what the setup is here for it. So a lot of those out there, I have to look and I go, okay, Jeff, do you want to trade some of the upside here? Is there enough upside, potentially out there to trade it? And for me, I don't think so. I just don't think so. I could be wrong and be underestimating the upside potential in this market. But I would rather kind of sit and wait for my downside signals to come in, especially on some of these stocks that are not going to hit new highs like Caterpillar, and take advantage there. Now, oil. We traded Halliburton a couple times. I've mentioned I want back into some Halliburton. I don't have a trigger right here today, as it sits. But, if we look at oil, the price of oil here, USO, you can see that it's sitting up near its highs for the year, right? Oil has kind of stabilized overall. In fact, we come to the WTIC, you can see where it sits here. And we're coming into a retracement area for oil. And if we just slap on the retracement to this kind of monster drop that oil had, you can see where these retracements are. We're dealing with a couple factors, in terms of slowing economic data, which tends to be a hang or an overhang for the price of oil. But we've come up into this initial retracement here and into a spot where we've seen now a multi-week consolidation. And it is one where, if it breaks on higher, bulls are going to point to a nice little descending wedge type action or pennant type action and say, all right, this suggests that, the move is halfway. We should get up to around $62 to $63 here on oil, and magically, that is the full retracement. Okay. I think there's a very valid argument for that, and I think a break over 57 here in oil would confirm that is on. It does need that break above 57 for that confirmation. It's also one where if it does break down, technicians are going to write, see, lower highs right here, and ultimately break down. Right. It's funny, the technicals, I shouldn't say funny, but it's, that's how technicals work, right? If it breaks up, well, see, it was this pattern. If it breaks down, see, well, it was this pattern. But in all, oil's in this pretty hefty consolidation. We saw it try to break down last week, and I'm going to pull up the QM. And it tried to break down here below 55. And it was the first time this month that it had broken below 55, and it quickly found support. Very quickly found support and snapped on back. Now, it hasn't made a new high, But this is something where if it does come back to 55 and breaks 55 again, I think we're going to see, I think we're going to see the sellers really start to come in and come in strongly. If you're bearish on oil, right, it's an easy play. You just play it off the high right here, and you have a decent risk reward. I did go price out some USO puts, here today. Thought, you know what, do I look to play that? It's not a bad risk reward here on it. And if you look at the options, the spreads aren't bad, right? I can get the time that I want. I can come out to the 5th of April. I can grab these, 12.5s or 12s. I get pretty good value there, a decent delta, with it. And so that is something that I'm looking at kind of going into the close. But I do have a little bit of concern that, does oil break on higher before its next move lower here? And, we'll kind of be looking at that as we go into the close today and kind of as this week progresses. And, if it can maybe, break above that kind of 57 level and then, fail at that, that might be a better opportunity, to jump in. Now, earlier today was asked about Newmont mining, NEM. And so we'll switch here from oil to gold. And Newmont mining, gold miner, and we've seen a lot of consolidation in this space, right? Rheingold was bought out by Barrick. We've seen, all sorts of consolidation within the industry, and it's not going away. These companies have seen the benefits of coming together. They've seen the benefits of, sharing some resources and consolidating some resources. And, we continue to see this. And ultimately, I think it's a long-term bullish element for the gold miners, for the GDX, right? So this is just this consolidation is something that is a net positive for the entire industry going forward. And I would not be surprised to see the gold miners, the GDX, trading up in the 30s in the next 6 to 8 months. Okay, that's kind of where I stand with the gold miners. Overall, I'm bullish in gold. Now, one of the things that's kept gold down is the fact that there's no inflation out there, right? There's just zero inflation when it comes to the world. There's 2% here in the U.S., but there's just not a lot of inflation. Gold tends to go up with inflation, but gold is held up. Here as U.S. dollar is sitting near highs, so is gold. Right? Like gold's a currency. And, it trades generally opposite of the U.S. dollar. And you can see this rally in the U.S. dollar here, 2018, 2019. And then you look at gold, which should be dropping, and it did. It dropped 2018. It dropped nicely as the U.S. dollar rallied. But it has been tracking higher on this last leg of the U.S. dollar going on higher. Now, market bears will use this as an argument to say, well, yeah, safety money and, market stocks are going to fall and stocks are this and that. But the reality is, we look at gold and it's sitting up close to its highs, close to its multi-year highs. And it is in a spot where, if I back this out to a monthly, right, you can kind of see this multi-year consolidation. Gold has not, gold went on a monster run here from 2005 to 2011. In fact, let's see if I can go back a little bit further here. Let's go back 20 years. Here we go. Okay, it's just for the GLD. Let's see here if we can go actual gold. There we go. But you can see where this rally started, right, in gold. 9/11, saw a big pop in gold. Gold pretty much has been rallying since. Yes, it's had pullbacks. It pulled back magically in the Lehman crash. Wow, the market crashed and gold went down. Interesting, right? But overall, yeah, gold, huge monster, 10-year move. pulled back here in 2012 into 2013 into 2014, but ultimately this has been about a 6-year consolidation. This is a monster consolidation, right? We're talking about one of the biggest consolidations historically speaking when it comes to gold. At some point, this breaks. And when it breaks, right, you think about what consolidations are. They're that element of taking that rubber band, right, taking that rubber band, putting it between your fingers and just twisting and twisting and twisting and twisting, right? And it's consolidating and it's twisting and it's twisting, and then boom, when it pops, it pops. And, that rubber band goes flying. And when consolidations snap, when they finally break, there is a huge move historically. And with gold, I don't think we're going to be talking about a 1-year move. I don't think we're going to be talking about a 2-year move. I don't think we're going to be talking about a 3-year move. I think we're going to be talking about a move that is 5 to 7 years directionally, directionally speaking here. We're seeing some signs that move's going to be higher. One of those signs is that we have, the U.S. dollar kind of rising, and gold, really kind of still near its short-term highs. You think about what this means for the gold miners, right? You think about Newmont Mining. And yes, right, the hostile takeover with Barrick and, slap down, and now this joint venture with Barrick in Nevada. Okay, great. Bottom line, we can go into all those little details, and they have created some of these pops and drops in the short run. Those are going to play out. Those are going to go away. Those are, these little pops and drops, those are news-driven. The bottom line, what's happening is consolidation. When companies consolidate, they tend to become leaner, meaner, and more profit-driven machines because they're able to get rid of some of the excess, they're able to increase margins, and ultimately increase revenues and earnings. So when you think about the consolidation going on in the mining space of gold, you think about the multi-year consolidation in the price of gold. What will happen if the price of gold starts to rise? What will happen if the price of gold starts to break out higher? What's going to happen to a Newmont Mining? $34 is going to look like chump change for Newmont Mining in that situation. Now, when's it going to happen? When's the big breakout? When's the big move? There's some signs that it's on right now. We're talking about higher lows, right? We're talking about gold sitting near short-term highs. There's some signs that it's starting to happen now. And my point here is, bottom line, longer term, these gold miners, there's a huge upside potential to them. There's a monster upside potential to them in a way that maybe hasn't existed here in quite some time. There's a lot of different ways to play it. You can play with Newmont Mining. You can play with Barrick Gold, right? Barrick Gold is, this is who, they've kind of who they're doing the joint venture with, right? So you could do it with them. Here's Gold Corp, which has had a nice little dip and, ripping back here. There are smaller cap names like Harmony Gold. For me, this is kind of where, if you want to play a big, bad, bullish gold thesis, and you want to park money and forget about it and think to yourself, you know what, I could come back and this is a gold mine, and you just close your eyes for a few years, Harmony Gold is where that's at. We see the price of gold surge. To see a Harmony Gold push up into the $18, $20, $30 area, I think there's just a decent chance of that happening. You look at Yamana, some of these that have just been totally, taken out to the woodshed, these are going to be the types of companies that really come back, on a gold breakout. But they're going to need that gold breakout. The safest way to play gold miners higher is, let's come in here to the screener. And let's come in here to the industry. We'll come down to gold. Sorry, I'm going off memory from a few weeks ago here. But if we come into, let's see, valuation, let's come in. No, I want to see margins here. Let's come into financials. Is that where it's at? Yeah, so here we go. Gross margins. Right. You want the stocks that could really benefit in a huge way from a big surge in the price of gold. Take a look at these ones with the high gross margins. Now, their gross margins may be high, RGLD, high gross margin, but their profit margin's negative, right? So, it's when you strip out all the operations and everything, it's a lot of these, they're not making money. That's one of the reasons why we see consolidation in the area, because they aren't making money, right? But you look at the ones with high gross margins, these are going to be ones that really benefit in a big way from a big boom in the price of gold. And these stocks are relatively inexpensive. Their valuations are not absurd. If we come into the valuation here, you come into something like a price to sales, right? Most of them aren't up here at 130 or at 21. Most of them are down here at the 1 and 2 and 3 level. They're not absurd numbers here with that. When you look at PE ratios, most of them don't have one. Why? Because earnings, frankly, have just been negative. So if you take the price of the stock and divide it by something negative, you get nothing, right? So, that's why, they've been in this situation. But if we do see gold break out, these gold miners start to become profitable. They start to have PEs. They start to become attractive to investors. They start to see more money come in. And what do we know about gold? When gold starts to go, gold goes. It's as plain as simple as that. When it starts to move, it moves, and it moves big. It defies any overbought, oversold levels. It defies support and resistance, and it just goes. And we're seeing signs of that happening. When you just look at the macroeconomic picture, when you look at the the chart picture, the currency picture, and you see now this consolidation within these miners, it's a pretty interesting thesis, and it's one that I think it's a matter of time, not it's not a matter of if, it's a matter of when. And, we see it starting to happen. It is absolutely starting to happen. And, how you play it, not all of these are optionable, but you could take something like a Newmont Mining, right? And you could come into the options and come out here and, say, forget about that, forget about time. And, just come on out and see about a spread, right? The 40 to 50 spread is going for about $2. Yeah, that's pretty insane. But, you can get into Newmont Mining for $2. And if Newmont goes to 50, it turns into being worth $10. So you make 500% or 400% on your money. That's not too bad of a deal there. Right? That's not too bad of a deal. So you can, set it up with some spreads, give plenty of time, and, kind of ride it on out. Just put what you're willing to risk and go. Here for this year, wow, that's interesting. For this year, it's so much cheaper. It's much, much cheaper. They do have 2 more strikes here, though. But if you want to bet on Newmont going between 50 and 60 this year, you want to do it with a spread, you can get into that for, 25 cents? And something that could be worth $10. right? Yes, Newmont would have to go to 60, and that sounds absurd. That sounds crazy. That sounds like no way. Yeah, no. We have seen more absurd and more crazy and more unusual when it comes to gold overall. Okay, so anyway, that's my thought there on Newmont Gold, the industry, and what's happening. I keep my eye. I do have the GDX and Newmont Mining on the challenge watch list to trade them. As shorter term signals come in. Newmont has kind of gone to the back of my watch list with all the news. I'm going to let it chop around, let it do its thing. Not, I need to let this play out. It's still a little too herky-jerky for me. But Yamana, this thing set a buy signal on Friday. And, held up pretty well yesterday, holding up pretty well here today. And my concern with it's still consolidation risk. But, this is something where, with Yamana, if you get the options right, you get the timing right, and with the options, these options can appreciate in a huge way. And so, definitely something that I'm looking to trade, but I haven't stepped into the gold space here, for this challenge, just yet. All right. So anyway, that's my those are my thoughts on it, and kind of what's happening there. Thanks for hopping on. I'm going to take a look here in about 30 minutes at the, kind of where everything is with my watch list to make a decision on a trade. I'd like to go into the close with some skin in the game, but my senses just tell me, hey, be patient. Just hold off. Just wait a little bit, and that may mean that I can't be too patient in the morning, right, or something like that. But that's kind of where I'm leaning at right here. At least seeing where things are and what's going on out there. Right now, I'm not going to be surprised to see a little bit of selling into the close here today to basically take the market right back to where it opened, right? Here's where the market opened. If the market falls another 5 points, it's right back to where it opened, and I would not be surprised to see that. I don't think that's uber bearish, if it happens, and I don't think it's uber bullish if the market just closes up here at the 2,800 level either. So, a gap tomorrow, one way or the other, I do think would have some significance. And if we are set for a gap, I will jump on tomorrow before the market opens to discuss it, what the trade ramifications are with it, and then hopefully to get a chance to jump in and trade it. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.